Hey everybody, this is Jose here. This is a sound check. I'd like to confirm you hear me so we can start the session. We'll start in like 25 minutes, 25 seconds, 20 seconds. So please give me a quick message on the chat box just to confirm that you hear me. That would be appreciated. That's great. That's perfect. Thank you so much, everybody. Let me close the windows that we don't need and maximize the introduction slide so we can begin our session. Well, first of all, I have to say it's a pleasure to see you guys. Dirk, Three, Lisa, everyone, Royce. Super pleasure to have you in the session today. And let's begin. Okay, let's begin. Market will open in 30 seconds. So let's see if we can have a few trades already planned out before that time. So then when the market opens, we can execute them, okay? So welcome. Today it's 29th of August 2019. My name is Jose Blasco. I'll be your guide. And today I'm guiding you to do longer term trading. That's why we're getting together. We're gonna be looking at opportunities. Let's call them swing trades. Anything above and beyond intraday trading, that's the purpose and that's the goal for today's session. And as always, options will be our little favorite asset to do these type of trades, since we'll be doing directional and non-directional trading. So before we start, we have a disclaimer, so I'll do this quickly. The following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only, and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive when using our products. And that would take care of the introduction slide. So here we go. Here's our flow chart, which I have it ready in case we need to refer to it. And of course, this is our trade station, which is going to be the key analytical tool that we're going to use today to plan and execute our trades afterwards. Okay. By the way, I have the chart loaded here with Roku. Okay. And I was just looking at, before the session started, I was just taking a look at, what is it that we have in the account, how are things going. Okay, and of course, we're getting together in a weekly basis, normally on Thursdays for this session. Every time I identify a trade like I will do today, I will assume that it's good for you to take it, and therefore I will plan it beginning to the end. The fact is that it's not always the case, because you may have already too many longs or too many shorts in your portfolio, and therefore you may need less longs or more shorts or vice versa, right? I would expect that your account doesn't look exactly like mine, because it would be a massive coincidence, given the fact that all of us are different. We have different capital in our accounts, and probably you trade more than 1 day per week, isn't it? Which is when we get together. But in any case, okay, these are the positions that I have in the account running at the moment. Some are non-directional, such as Johnson & Johnson. That's an iron condor. Okay, this trade is a little bit in the red at this moment in time, but collecting $10 of time decay, okay, per day. So that's good. And then we have other trades that are directional, where the one that I would like to highlight is Roku, where we just went ahead and buy a straight call. This position is currently giving us some profitability, given the fact that Roku is moving in the right direction. Okay, so again, this session, the reason why I started today with looking at the trades I have in the account on my side, it's because, again, today, as I always do on the Thursdays, I will be looking at directional trades, long and short. Okay, and you can see these here in our radar screen. We have our scanner, right? And so here are the filters I am utilizing in today's session, where the two on the top are directional long and short. So when I plan the trades, again, look at your account based on the rules that we cover, or your own rules when it comes to portfolio management. Decide if you want to take the trades I plan or not. Okay, when it comes to directional, depending if your portfolio needs those trades or it doesn't. And also, we'll be working on the non-directional trades. And if we don't find any valid non-directional trade, then we'll move into the neutral trades, which is a very similar type of trade, very similar to non-directional, but where you have a little bit of a bias in a specific direction, okay? So we're gonna be working on all of this, okay? And again, keep adding positions in the portfolio. And of course, on your side, you need to be evaluating if the trades I'm giving you are needed or not in your account, okay? Just to keep it very simple, let's say you already got 7 trades where you are long, and you have no trade that is short, creating a little bit of a hedge, and now I was to plan another long trade and you were to take it, where probably you are loading yourself too much with too many longs, okay? And again, you need to balance out your portfolio as we covered in prior sessions. So I just wanted to give you this quick reminder, which I believe to most of you, most of you have been following the sessions for a while, as I can see at least the traders that you type something on the chat box, so I can see your name in front of me right now. Probably you know what I'm talking about, because you are joining me in a regular basis, so you know how I'm thinking, and you know the rules that I have been sharing with you guys. But for you guys that could be newer to the sessions, or if you're watching this recorded, it's important to keep that in mind. Okay, so let's begin. Okay, let's begin, and we'll start with non-directional trades. As always, when looking at non-directional trades, we need to do a few things at the same time. Number one is look at the UFOs, make sure we got red UFOs above, green UFOs below. We have a nice range. We have multiple UFOs lining up on top of each other, meaning that we have multiple barriers for the price to go down and also multiple barriers for the price to go up, and therefore find a setup where that market would likely remain sideways. For example, Roku is a clear example of what we are not looking for. Roku has only green UFOs and we see no red UFOs, okay, which means it's a trending market, and you don't want to do non-directional trades when a market has such a clearly confirmed climate, okay? So we're gonna look at other types of setups, okay? But apart from that, we are going to be looking at as well, why is it, okay, that's a key question, why is it that when we run the scanner, which one of the things the scanner does is to look for options with huge amount of premium, more than what would be normal, okay? And so the question is, why is it that those options got more premium than normal? And a classical reason for that, and I'm going to bring Yahoo Finance here, okay? And again, oops, sorry guys. Here we go, Yahoo Finance, we got it. So another reason for that, okay, a classical reason for that is, because earnings are too close, okay? And as earnings approach, options gain value. That's good, but at the same time, it's also dangerous in the sense that a non-directional trade would be badly hurt if a gap was to happen, and gaps happen to be something that happens quite often when dealing with earnings, okay? So I'm gonna start with Adobe, which is on the top of the list, okay? And Adobe is showing me that the next earnings report is to happen on September 18, okay? I'm looking at the calendar as we speak. I'm looking at tomorrow as the next Friday, which is August 30, and the next Friday would be September 6. So September 18 happens to be after September 6, even September 13, which would be the next Friday, meaning that as long as we have the UFOs we need, so I'm clicking on the symbol Adobe, as long as we have the UFOs that we need, it seems that the expiration date for the option that we could use is valid, okay, given the fact that we could use an expiration date that expires prior to the earnings report, which is September 18, and therefore avoid any gap as a consequence of earnings, okay? Anyway, so when looking at Adobe, I am loading here pre and post market data. I know this because I can see those little pink candles. You can see the statistics are not too favorable to me, so I'm going to switch to regular session. And when that's the case, I still got 47, which is not favorable. Remember, we normally want to see 50 or more. That's the minimum we would like to take. For non-directional trades, since we take time decay, you've seen me at times use a little less than 50, okay? But I would feel 47 to be too little, okay? So let's go ahead and check on the next one, AVGO, okay? And same thing, while I'm loading the chart, I'm going to be typing the symbol for AVGO. Okay, so AVGO, which has earnings on September 13. So that means that we could use September 6. Okay, that would be okay. Okay, so Broadcom, when it's still pending data, you can see the yellow box here on the upper left. Here we go. So Broadcom has 49.20. It's not amazing. Okay, it's not amazing, but it's okay. Okay, it's not amazing, but it's okay. And if we were to look at, instead of regular session pre and post market, then instead of 49.20, we get 1, 2, 3. Okay, come on. Yeah, I guess TradeStation is still downloading data. We got 43%, okay? Which obviously 43%, it's not enough. It's way below 50. So with that stock, regular session data would be the type of data to be used. Okay? And if we were to plan the trade in this way, let me load a little more data here, okay? So, yeah, I'm just a little concerned about how equidistant we're gonna be from those UFOs, okay? But again, instead of doing too much math in my head, let's follow the process, okay? The process that we do when we do a non-directional trade is to first type the symbol AVGO on Option Station Pro, pick the right expiration date, which we already said is going to be September 6th, isn't it? Since earnings are on the 13th, we're going to have to use September 6th. And without even thinking about it, right-click to analyze and sell an Iron Condor. And when you do that, automatically, TradeStation will place the Iron Condor here in the Analysis tab, and I will change the plus 5% to plus 1 standard deviation, and the minus 5% to minus 1 standard deviation. So when doing so, I have now concluded that the stock has room to move up to, based on pure statistics, okay, forget about the UFOs, just pure statistics, which is a good beginning. So that stock got room to move all the way from 267 to 295. So I am looking at UFOs located at 295, and therefore that's the UFO I'm looking for that particular trade. Okay, so I would like to sell options above 298. Okay, that would be the price for the option. So before I keep going with looking at the bottom side, let's look at how much I get paid for those options. Okay, and I got 297.5, which is close enough, and this one pays me 28 cents, which is going to be more when the market opens, because as you can see, Broadcom is up. Okay, it's $4 up in the overnight session, so it's gonna gap up at the open. Therefore, we may get a little more than 28, and 28 is borderline, because you probably remember. Let me bring the rules. I'm just opening a Word document here, guys. Bear with me. Okay, so I have it. So when bringing the rules here, okay, so you probably remember that as a minimum, what makes us very, very happy is to sell options for at least 35 cents. Okay. Now there are times where we'd accept a minimum of 25 cents. Okay. But that would mean if the call side is paying you 25, that means that the put side is paying you much more than 35. Okay. So somehow it balances out by using both sides of the equation. So in this case, we are getting 28. It's going to be more at the open. I would anticipate that. So 28 is not amazing, but you know, it would be valid. So because it's valid, so then now I am willing to look at the bottom part, okay, of this trade and decide on where my lines should be. And to do that, I need to go back to the Option Station Pro, look at the Analysis tab, and here it says 267. Okay, so 267.47. Okay. You know, I got a UFO there, which is 268, okay? And I am telling you, even though 267 is below 268, since this market is gonna open 1.79 up, which is 281, 281 is somewhere here, okay? So that particular market is gonna open at this price level. So the moment this market opens at this price level, what may happen, okay, is that 268 becomes valid and 297 becomes not valid anymore, and therefore we may end up having to use the next one, which is 300. Okay, now the 300 at this moment in time is paying 15 cents, which is not enough. but with the move up, $5.93 up, okay, the 300 may pay the 25 cents that we need, and then we would have to look at the bottom part, which is 267, where did I say that right? Yes, 267, where right now we're showing a huge amount of premium, 288, okay, which again, that's gonna change as the market opens and we have this gap up, okay? So big changes on these figures in a few minutes from now. So, you know, I'm just gonna get ready just to be quick because we may have to run a little bit. Especially I say we may have to run because when this market opens, it's gonna open inside the UFO. So what may happen is that we have this gap up and from there it starts falling like a rock very quickly. And, you know, if we get filled at this price, okay, that's gonna be a very nice price for the Iron Condor, where if we miss it, then it may not be possible to do, because if the market then falls down again, then again the 300 may be less than 25 cents and we may miss it, okay? So that's why I want to have everything ready, and therefore I'm going to do 302 300, and then I want to do 265 267.5, which those would be my strikes, okay? So I'm just gonna write it so I have it ready on the screen, so later when the market opens I will be very quick at doing all of this. And if I'm going too fast with this explanation, please let me know, because really I don't have any reason to rush too much now since the market is still closed. But when the market opens, I will likely have to rush to get filled at the price that I want, okay, for this Iron Condor, okay? So we are likely going to do 267.5 put and then 265 put, okay? So plus sign is for buy, minus sign is for sell. September 6th will be the expiration date, okay? Because remember, earnings, okay, earnings are on September 13th, okay? So we want to be out before that, which is September 6th. Okay, so I guess it's all good. If it's not good, please go ahead and type it on the chat box. Actually, be generous, my friends. Type it in the chat box. No matter if it's good or it's not, just let me know, good or no good. So I will know if you're following or you're not. And again, I'll come back to AVGO exactly as the market opens, so we can be quick and efficient to do that, okay? Cool, wonderful. Thank you guys for the feedback. So next one, what else do we have? EOG, okay? So EOG is another stock because again, we are looking at those high value options. The first thing to be done here is to look at earnings. Earnings here would be happening on October 30. So no problems there with earnings, okay? Well, the problem may be that we got 46%. And if we look at pre-post market, we have 44%. So this is not going to be a valid stock to be used. So we'll move to FedEx, okay? So we are moving to go ahead and check on FedEx. So FedEx, okay? FDX. September 18, okay? Very good. September 18 works. So let's go back to FedEx. Still waiting for the PD to go away. That way I will be able to have a proper reading. So we got 48%. That doesn't make me happy enough, to be honest. I mean, I could certainly do a trade, but that's better. 49.86, that's better. Still not amazing, okay? But it's certainly valid now, okay? So now, so again, mechanically speaking, without even thinking, so let's go ahead and type FDX. The moment I get FDX loaded, I will just come to September 6. I can also do September 13 because remember earnings are on the 18. But again, the rate of time decay is faster in the shorter expiration dates. So I would want to begin with September 6, make the trade a little more active, okay, and see how it goes. Okay, so plus standard deviation, minus 1 standard deviation. So that is giving us values going from 147 to 161. So what do we have on the chart? So when it comes to 161, I believe it's quite clear. We have a UFO there, even though I am quite uncomfortable because it's only one. And to defend myself properly, I would like to use at least two. So therefore, I'm going to move to the next one, which is 170. Okay, but I believe that the 170 will pay me nothing, exactly, 3. So I will need to move to September 13. And now I'm still being paid less than 25, as you can see, for the 170. And therefore, I'm just going to give it up on this trade because it's not worth it. So I'll go for the next one, which is GIS, and checking on the earnings. Okay. And by the way, guys, as I'm doing the process, because I'm doing the whole process in front of you guys, so you can see how it's done. So when we are not conducting a session, you can do it yourself. Okay. So I would like to ask you, how many of you are practicing this process in days where we don't have a session? How many of you are practicing it and ideally executing it with real money, paper money? That, it's, obviously real money is the real goal, okay? But it's okay if you're practicing with paper money. I would like to know, how many of you are, practicing the process, okay? And putting a little bit of effort into developing the skill, okay? So 49.63, that's what we get with stock pre and post market. With regular session, we got 55. This is obviously much better. Wait a minute, because where are we at? Okay, yeah. So we do have UFOs. We do have UFOs on the left. I do have lines there, which probably means that sometime in the past I loaded many more candles to find where the UFOs were. So let's load 5,000. Okay, yes, exactly. So this is where I put my lines where those UFOs are. I guess I did that another day, okay? Good. Okay, so this is where we have the UFOs. Oh, yes, I can see the issue. The issue is that we are no way equal distance from current price to that upper UFO, and no way equal distance to that UFO, or even worse, that other UFO, which is very far out. Okay, so yeah, so we are not going to be able to plan on a non-directional trade for General Mills. Okay, let me see, Lisa. Yeah, but recently you had issues with kind of getting results for all of them. Okay, so let me show you how to fix that. And this has a lot to do with internet latency and stuff like that. Pretty complicated TradeStation network. But here's how you fix it. You come to the scanner, Lisa, and you right click, you select settings, and then when you move to the preferences, okay, you go ahead and you take the timeout and you just push it all the way to the right. You may not need full 2 minutes, maybe just a little more is enough, but I would say just for the starting point, just go all the way to the right to the maximum amount, which is 2 minutes. That will make your scanner to take longer to run, but you will get results. I'm pretty positive. And maybe Lisa, you want to do it while we are in the session. So before the end, you can tell me if it worked or it didn't, okay? 3, very good. Little roasting, but getting better. That's the plan. Dear, iron condors are your bread and butter. Yes, I know you are a lover of iron condors, as myself. They are a great strategy. Yeah, short term only for Royce at the moment. Okay, good. All good, my friends. Okay, again, the more I know you, the more I can help you. Okay, so this is the reason for these questions. Okay, so what about Lulu? So Lulu. Okay. So Lulu will be having earnings on September 6th, okay? So that's not good, okay? That's not good because this only gives us an opportunity, which is to do a non-directional trade using the expiration date for tomorrow. It's not good, but we are dealing with a stock which is almost $200 per share. And when that's the case, we may find those 25 cents, okay? We may find those 25 cents. That stock is going to be gapping up 1.20% right at the open. Okay, so I'm not sure exactly how the trade will look like. But if we have this UFO here and we have a massive gap, 184.90 is going to be right below this UFO. Yeah, so yeah, we will need to be using those UFOs and the one below. Okay, so I'm not sure we'll have premium enough. Let me check the 173. If we don't have premium enough with the 173, then we will forget about Lulu for that purpose. If we do have premium in the 173 put using tomorrow's expiration date, then right at the open, I will look at this again. Oh, okay, the option chain just reset, of course, preparing for the market open. So we'll have to check on Lulu later on, okay? So guys, I'll continue with the process that we are running, looking at those stocks for non-directional trading. Non-directional trading, of course, implies that I need to use Option Station Pro for my simulations and my preparation, and I cannot now until the market open. Okay, so what I'm going to do is pause on this initial pre-preparation for non-directional trades, and I'm going to move into directional trades, okay, and begin looking at those opportunities. Okay, so we have Celgene. Okay, Roku and Twitter, we have them in the account already. So I'll skip those two because we already have them. So let's take a look at Celgene Corporation. Normally, there is no need to do what I'm doing right now because the scanner is looking at options that are very low in value. So normally earnings are always far, which in this case is October 23. But it's always, since I have to wait for pending data to be loaded, so I decided to check. So that's looking good. As you can see, Celgene has a confirmed climate with 3 candles into the current climate, while when we have this sort of a climate, typically we take 6 candles. Okay, so we are going to enter in candle number 4, which is a valid entry. Oh, you're using 9.5 and you don't have a setting option. Okay. You should have it somewhere. Okay, you should have it somewhere. I would not know by heart, Lisa, but you should have it somewhere. Maybe you want to give a ring to the TradeStation guys, okay? But what I just showed you on 10 should fix it. So if you were to find the same setting on 9.5, you'd be okay, okay? Anyway, so it's taking a little bit of time to load. What else do we have here? So we have Match, NWL. I believe we also plan a trade on that one, isn't it? So NWL, Roku, Twitter, I believe I will skip those because those are all stocks that are working in the right direction. Okay, so if you are in those trades, you should be in profits at the moment. So yeah, I'm interested to complete the plan for CELG. So let's see what we got. Okay, we got an average price around 96. Average price around 96. That market is going to open at 97, 98. It's going to be higher than now. So that average is going to be around, I would say maybe 96.5, something like that. So what happened here? It went from 96.14, 95.45 to 95, like $0.50. With a big move like that, $0.50. So if the average goes up by $0.50, it's going to be 96.7, which is below those UFOs by a great margin. Okay, so 52% is what I get with a regular session. Let me see pre-post market. 43, yeah. So Celgene is a stock for you to watch probably for the day after today. Okay, meaning tomorrow. Today probably the average will not be lining up enough with those UFOs, even though we don't need exactly that, because remember, I said it a million times, stocks are fragile. They depend on other external forces, such as the broad market, the sectors. So, we don't need to be super precise with the average, but, having the average that far, it doesn't make me very comfortable. So what I'll do, just to double check, it's at the open, I'll go back as well to check what is the new value for the average, okay? Match. Let's load match. Okay, so it's pending data. Well, we're gonna pass on match. Okay, we're gonna pass on match, and the reason why is that we already got 10 candles into the current climate. Okay, 10 candles into the current climate, where this type of climate tend to last 8. Okay, so I mean, technically 8 plus half of 8 is 4. So that would be 12. So today we will see flashing here number 11 as the market opens. So we still have one day to go. Okay, so let's wait for the chart to be fully loaded, okay? And we may still have a shot for today only, okay? But then the next day we need to cancel that trade because it will be a climate that is too prolonged, and therefore it becomes unsustainable. And it doesn't mean it's not going to sustain, but the probability of sustaining is less, okay? Oh, you found it. You found it, Lisa. Nice. Okay, so it's taking a little bit of time to load. Looking at the clock as well. So we are 3 seconds away from the open. So while it's loading, I'm just going to go back to AVGO. Okay, see where the open is going to take place. Okay, that's it. So we are trading, market just opened, 2% up, 281. So with that market up 281%, sorry, to 281, we are now dealing with a range between 270 and 294. So 270, okay, 270 actually allow us for us to use this UFO, and 295 something would also allow us to use 297. So we're fine. Now, from an equal distance point of view, let me see if I want to use, yes, I'm gonna use it the way I have it, okay? Because again, I want to have 2 green UFOs to defend myself, and I have 2 red UFOs to defend myself, okay? So I am exactly where I want to be, okay? So the question is, you know, if I do, I'm just gonna change this to 297.5, 300, okay? Because in the end, we didn't need to go that high. So if I do that, okay, if I do that, so what happens from a point of view of the premium collected, the risk of the trade, etc., etc., etc. Okay, so here we go. So if we do this trade, we are going to be collecting 45 cents. Okay, again, right at the open, liquidity is not the best. Okay, you can see we got bid is 90, ask is 10. It's looking actually quite weak, okay? But you have seen how the 45 became just 50, 52. So, you know, this is kind of normalizing a little bit as the market opens, options start gaining a little liquidity, and that may improve a little, okay? Now, what is the maximum risk I have in this trade? Well, the maximum risk you have in this trade is the distance between strikes, which is, as we can see clearly, easily $2.5. Okay, so what is the maximum risk that we are willing to assume? The maximum risk we're willing to assume is 15% of the risk, which is the difference between strikes. Okay, and how much is 15% of 2.5? Well, it's 37 cents. And how much are we being paid? 45. So my friends, this is a valid trade. Okay, this is a valid trade, and therefore it's time to go for it. So I'm just gonna click trade to enter this trade. Okay, now this is the time where I'm going to ask you to be picky. Okay, even though the midpoint is 48 and being filled that the midpoint is already a little bit of a luxury, because the market is just opening and stabilizing now, I'm going to ask you to go for 50. Okay, be very demanding. You may not get filled, you may get filled, just go for 50. That's it. Okay. In my case, I'll do market. As you know, I am executing these trades in a simulated account, and TradeStation will not fill me unless it's market. So I'll go for market. So I will get much less. It's okay for me. But in your cases, guys, notice how the midpoint just flashed 55. Those options are gaining a little liquidity. If you are patient, you are likely going to get filled at a better price than me. So just do that.
Filled.
Okay. And that's it. Okay. So in my case, I am in. I just did the trade. Okay, I did it with one contract, okay? Everyone here will be doing it with a different size, of course. So I got AVGO, okay? The trade is in. Notice how the slippage is hurting me a little bit. You guys see that? Okay, that's the slippage that is hurting me a little bit, okay? Because I went with market price, okay? Don't do that yourself, so you will not see such a negative value right at the beginning, okay? Good, perfect. Anyway, things going okay in that account. The trade is in. So I believe that you probably are working on your side on putting this trade in place as well. So I'll slowly move back to the charts and begin getting ready for the next trade while I give you a little bit of time for you to complete this process, and that way you can also take advantage of this trade, okay? Okay. This was our entry day. Right in the middle of the range. Nice one. Anyway, so, okay, so let's go for the next one. The next one I said, I mean, we need to continue with the non-directional trades, but the last thing I said right before the market open was that I was going to look at CELG as the market open. So let's do that. So yeah, so 96.26 is the new value for the average, okay? And obviously 96.26 is all the way down here, which is very low compared to where the UFOs are, okay? So we don't have the UFOs and the average lining up in a way that is convenient enough, and therefore, since we don't break rules, we are just gonna skip this trade, okay? So then I go back to non-directional trades to continue with what I was doing, okay? Everybody good? Please give me a little feedback, and by the way, if you place the order and you get filled, please go ahead and share on the comments box what price did you get, okay? That way it would help your other teammates in the group to have a little bit of a feel for what the market is willing to give, and they may be able to place orders and get better prices as well, okay? So, you know, traders helping traders, okay? So go ahead. You got filled at 45, Dirk. Very good. Very good. Perfect. Okay, so let's continue. Okay, so we stopped here. So now IWM, I will skip this one. It's an ETF. IYR, I will skip this one. It's an ETF. Lulu, we already seen the earnings day was not convenient. 3M. So let's take a look at 3M and look at the earnings date for 3M, which is October 24. So no problem with 3M. Absolutely no problem. Okay, absolute no problem. So we got 48%. That's no good. Well, actually, we're still pending data, so we're gonna wait for the yellow box to go away. What else do we have? Let me save a little time. We have Merck. Okay, so let's check the earnings for Merck. So Merck has earnings on the 29th. Okay, and I have a trade here with Merck, which is already an Iron Condor, okay? So this Iron Condor with Merck is working nice, okay? So we are doing what we are supposed to be doing. This trade will expire tomorrow. This trade is basically producing a negative theta value, which is against mathematics, right? You still have one day to go and it's giving you negative theta, which basically means that all the time decay has already been, you know, taken out, okay? So, you know, it would be certainly a smart move to go ahead and close this trade, okay? So let me take a look at customized columns here. So I want to see the price. I want to see the price I got. Sorry, not this price. The trade price. That's the one I want. So I can see how much I got when I did the trade. And when I did this trade, okay, trade price is not showing up. Why is that? Maybe it was price and I got confused. Let me see. So price. Okay, so I guess, oh, okay, I know what it is. I need to look at it inside. Yes. Yes. Yeah, so here, so I did it right the first time. Let me remove price. We don't need that one. Okay, so we got 18 cents of credit when we did this Merck Iron Condor. We did this with 4 contracts. Okay, so 4 times 18 gives you a profit of 72. And currently this trade is showing you 72, meaning that there is no premium left in those options at all. Okay, so again, it would be recommended to close the trade just in case something crazy happens to Merck and that stock starts moving like crazy. Okay, But again, the problem that I would have if I do it in a simulated account, the problem I may have, let's take a look at Merck and you will see what I mean. So loading Merck. Very good, Lisa. Good job closing Merck for a profit there. Very nice. So yeah, so here's what I wanted to show you, that even though it shows that premium is zero, okay, on the ask you still have 3 and 3, okay, and the same thing should be happening on the put side. So, well, actually, yeah, on the put side. So what's the problem? The problem is that if you do this in a simulated account, which is my case, I'm going to get the ask price, and therefore I'm going to be paying 3 and 3, 3 and 3. That's 12, right? 4 times 3 is 12. So in other words, I got paid 18, I will pay 12 to get out, and therefore my profit is going to be very, very low. So when you do this in a real account, you can shave it. You can use a limit order, which I'm sure this is what you did, Lisa, and you got a good price on the way out, and that's it. Free up that capital and go for a next trade. That's perfect. In my case, I'm just going to have to let it expire tomorrow, because being a simulated account, I can only leave the trade with market price, and then I will leave a lot of money on the table. And even though it's paper money, you know, it's kind of, it's painful to my mindset, if you wish, okay? So I'm not going to do it, okay? So anyway, I just wanted to make this comment since we have the opportunity to look at a trade that is ready to be closed and while we are together, okay? So MMM, so let's take a look at MMM. We said Merck has earnings on October, so we can plan a new trade on Merck since it expired tomorrow. And with MMM, we also said nothing in between, October 24. So, you know, we can plan trades happily with both MMM and Merck. We got 51% with regular session. Pre and post market goes from 51 to 47. So clearly, much better to use regular session for Merck, for MMM. Okay, and the only problem is that we need at least 2 UFOs to defend ourselves, at least 2 barriers. Okay, so I'm just gonna go ahead and input MMM. Go for the next expiration date. Got filled at 48 with AVGO. Good job, Al. Okay, a little patient space, isn't it? That's good. Analyze and sell an iron condor. Okay. Here we go. We have it right here. We got the plus and the minus, so it's 154. 154, 165. So 154 actually is good here. Okay, right below that UFO is good, but only one UFO is not something that makes me happy. And I remember we talked about this before. So where are we at in the life of that stock? Okay, so to get back to find UFOs below price, we need to move back all the way to 2016. So this is a lot of data that we need to load. And you know what's going to happen, right? So if you load too much data as the market is open, you may get a transition freeze with AutoUFOs, because it's a lot of processing, right? So what I'm doing, notice I disabled AutoUFOs, okay? I am now loading the data I need, okay, which is first date January 1st, 2016. So now I'm loading the data I need without the UFOs. I am going to get ready here with my platform toolbars. I'm going to activate the status bar, which I always have disabled to get more real estate room on my screen. But now I am opening it so I can see my data and simulated light here on the bottom right. And the reason why I'm doing this is because I'm going to be using this now to disconnect TradeStation from the network the moment my data is downloaded. Lisa got filled at 50. Good job, Lisa. Good job. Love it. Love the teamwork. Okay. Come on, MMM. give us that data. We got it. So notice what I'm going to do now. Now that we have the data all the way to 2016, I'm just double clicking and notice how the lights went red. So now there is no market data coming in and therefore no ticks, and therefore when I run AutoUFOs, it will run only once, and that will not saturate my computer. Okay, so here we go. What do we have? So we just discovered that we got UFOs not only at 155, 144, but also 152, 191, and also we have UFOs all the way to 146. Okay, so now that I got my lines, I can go ahead and disable AutoUFOs again, or actually I don't need to disable AutoUFOs now. I can just leave it on, and I will now go back to the normal amount of bars I load, which is 1,500, and now even though it doesn't show the UFOs anymore, I have the lines. That's what I needed. And now I can reconnect to the TradeStation network. Okay, and I will be back in business, knowing where the UFOs are without having to go through a computer freeze, if that was the case. Okay, so let's take a look. Okay, here we go. So TradeStation is back in business. Okay, and I'm just gonna remove the toolbar. We don't need it. And back to OptionStation Pro with MMM. So again, we are shooting for the 154. Right click, analyze and sell, an iron condor. So that is 155, 165. So that's good. Therefore, we would be using, we said, the 151. Not sure if there is 151 in the option chain. We got 150. This one is paying us 29. Okay, so that's good. And so if I was to do an option using the 151, which is going to be 150, and I was to project this to the upper side, just to be more or less equal distance, I would be leaning against that UFO, okay? That UFO 172, which is certainly more than 165, okay? So, I mean, if I use this one, I can use this one too, but then I am not equal distance. So let me see how much I get paid for the 167.5. I get paid only 15 anyway, so September 6th is not gonna work. So I'm gonna have to check on September 13. Now it's pointing at 152, 167. So still good with 167, still good with the 150. How much I get paid now for the 167 something? So the 167 something now is paying 49. So now I am fine. Okay, I am fine, but I would be more comfortable using the one above. So the question is, what if I use the one below? Okay, and I use the one on the top. Okay, these would really make me happy to use 173 all the way to 146. That would be a higher probability around condor. So 173 doesn't pay me enough with September 13, but if I do September 20, probably yes. So that would be 172.5. That pays me 29. Okay, and the 146. Okay, because now I would be dealing with the one below. Okay, so if I go for the 146, which is going to be more or less equal distance, so the 146 is paying me 52. Okay, so now I do have a possibility for a setup using September 20. Now the question is, with probability, validate those values. So 169 using September 20 is below 173. So that's a good beginning. And 151, which is the bottom part, is above 146. So still a good beginning. Okay, so in other words, we're fine. Okay, this is another valid trade, at least from the setup point of view. Now we'll see if we get enough a premium for the risk. So let's go for it. On the call side, we're gonna do 175, 172.5. On the put side, we're gonna do 146. Okay, 146 and 145. Okay. This is technically known as a broken wing iron condor. Sounds very fancy, okay? You can see it on the graph above. You can see the blue, how you have the condor. This is the body of the condor in the middle, but then one wing is higher and the other wing is lower. So it's known as a broken wing iron condor. And the reason why is because the distance between 145 to 146 is 1, while the distance for the call side, which is 175 to 172.5, is 2.5. So you have different distances, and therefore it's not a balanced iron condor, it's a broken wing iron condor. Okay, that's what this means. Now, do I need to do this? Yes, because notice how I don't have the 144 or the 143. It jumps all the way from 145 to 140. Okay, so I'm not delighted with this at all. Notice how much premium we get paid, 18 cents. And again, with a risk of $2.5, we did the math earlier. I'll do it super quick again. If the risk is $2.5 and you are shooting for 15% at least of premium, that's 37 cents, but we are only getting paid 18. So this is going to be a no. Okay, this is going to be a no when it comes to doing this iron condor. Yeah, it's a non-directional trade with a directional bias. You are correct, Dirk. You got a little bit of negative deltas in this iron condor. Okay, so we're gonna pass on this one. This one is not valid. Okay, so we'll keep going. We said Merck could be another candidate to plan on a new trade. The one we have running now worked very well. Some of you closed it for a profit as well. So let's go for it. Okay, so we have the lines above, which again represent UFOs that are found in the past, 54%, and if I switch to pre-post market, instead of 54 we got 40, so clearly we need regular session for Merck. Now a problem is that we are absolutely not equal distance from the upper lines and the bottom UFO, and by the way it's only one UFO. You would want at least two barriers to defend yourself. So we don't have it. Okay, so even though this trade has worked very well, it's not working well to plan a new one, at least today. Maybe a few days from now we'll have a setup, but not today. So going for the next one, which is Qualcomm. So Qualcomm, looking at Qualcomm earnings. So we are dealing with November 7. So we got plenty of time in front of us to do anything we want, depending on those UFOs. So 53% is what we get with a regular session data. Pre-post market would give us 54%, which is more. So that would be the way to go. And we do have multiple UFOs above and below. So we may have a setup on Qualcomm. So let's follow the process. QCOM. Okay, option chain. We'll start with September 6. Right click, analyze and sell, an iron condor. We do this without even thinking. This is only for us to have the iron condor in this analysis tab. And then we have the plus and the -1 standard deviation. So this is 72 to 80, basically. 72 to 80. So 72 would bring us here, which is not far enough because it's only one UFO. And 80 would bring us here, which is one UFO and a half, given the fact that this UFO is looking like has been traded very deeply already. So that UFO may be gone soon. So yeah, so we will want to go to 82, okay? We will want to go to 82, and we would also want to go to at least 67 to have those two UFOs in each side. So if we do that, are we more or less equal distance? I would say we are not exactly equal distance. Okay, so this is the distance to the upside, and this is the distance to the downside. So really, we are absolutely not equal distance. So if I was to calculate the distance to the green UFO and project it to the upside, yeah, I cannot even use those ones because I'm not in the right position either. Okay, so yeah, struggling to have a good setup with Qualcomm. I'm not saying you cannot take the trade, but again, the maximum theoretical benefit of time decay would be obtained the closer to the midpoint of the range when you enter. Okay, so QQQ is an ETF, XBI, XLB, XLUR ETFs. T-Mobile has always extremely limited amount of premium. So I'm going to look at the last one for non-directional purposes, which is Workday, WDay, with earnings on November 27, or actually earnings tomorrow, so we cannot do this trade. So we are done with non-directional, and we are now back to the world of directional trades. Okay, cool. So let me see if we can find at least one more trade before we go. We got 5 minutes. Let me see. So I'll look into YUM. Let me see YUM. We also have Weibo, Vodafone, Tal Education. I'm just clicking on the symbol so the download begins. Twitter will pass. We have a trade on it. Roku, we have a trade running, so we will pass on those. Okay. So okay, TAL. So we got 37% with pre-post market. So absolutely no. Regular session provides 47, so that's going to be a confirmed no. YUM, uh, 54% with regular session, pre-post market providing us with 43. So we need to use regular session. Okay, unfortunately, there's no green UFO around 116.80. which is more or less here. No green UFO. The only thing we have is red UFOs. Okay, so just be patient because probably what is likely to happen, and again, it's not about doing magic and predicting the future, but it's very possible that some UFO forms here, and either a few hours from now or tomorrow, you get to have a green UFO around that price level, 117 plus to 120, which is gonna be where the average is, okay, around 116, 117, something like that. Okay, so that would qualify for a trade, but not yet. Okay, so this is something for you to watch. Weibo. Okay, still loading. Well, Vodafone, actually, I'm gonna pass on Vodafone. It's too cheap as a stock. It's not wrong to do the trade, but it's really cheap. Okay, very, very cheap stock. So I'm never in love with using options on stocks that are so low value because you get more benefits when it's the opposite. So Weibo, I have a problem with Weibo. We are 9 candles into the current climate. When the market goes up, this stock tends to stay up for 4, let's call it 5. 5 and half of 5 is 7.5, but we already surpassed that. We are already 9 candles in that confirmed climate. So this is now in the territory of probably non-sustainable, and therefore if you enter this trade, you are hopeful, and instead of hopeful, we like to be sensible. Okay, I'm using the radar screen terminology. Okay, so done with the longs. So let's see what can we see in the short side. So ExxonMobil could be an interesting stock to check. We'll check Tesla for sure. Snap is a nice stock, but very low price. We can look at MedLife and Lilly. Okay, so we look at ExxonMobil, Tesla. We look at MedLife. Okay, we look at Lilly. I will pass on the Googles, and I will pass on Amazon as well because of the very high value of those stocks. I mean, which I'm not saying they are bad trades, okay? Actually, it's the opposite. But again, since I understand that many of you are learning how to use the options, probably you're trading simulated or you don't want to trade live such high value stocks because obviously they carry greater risk. Okay, so ExxonMobil, let's see what we got. So climate is fine. Okay, climate is fine. We got 4 candles out of 6. So we are okay. We are just above the average. Okay, we are above the average, and that's never a good thing. So I'm gonna pass on this one. Tesla. Let's see what's happening with Tesla. Confirmed climate also above the average, so not so good. What about MedLife? By the way, I skipped Valor Energy. So MedLife is in a confirmed climate, 4 candles into the climate. Those climates tend to last 6 candles, 570, and average 44.77, and 44.77 is more or less that UFO. So yeah, price is currently difficult to see, guys, but price is right here, okay, right above the red UFO because it opened up, gapping up 1% plus. So you know, we do have a potential trade on MedLife. So let's look for a target, okay, for MedLife using the next common time frame, which is going to be weekly, and that is going to be 43, round number. 43 would be the target. Okay, so we are looking at $1 plus move. It's not amazing, but that's what we are given. So we will respect and appreciate what is given to us. Remember, the market doesn't owe us anything. So if this is what's given to us, just be appreciative, okay? And yeah, so what are we gonna do? Well, we're gonna build a spread. So we are looking at MedLife, okay? So loading MedLife. We need to calculate the time to target. I'm moving quickly, guys, since it's time to conclude the session. So entry would be that UFO at 44.80, which the bottom part is 44.70. Okay, so we'll go for 44.70. That's the entry. Target we just said is 43, so that's $1.7. The average true range is 1.0693. So that's 1 week and a half to get there, times 7 days, that's 11 days. So we only need 11 days, but even though we only need 11 days, we also need to make sure that we are using an expiration date that lines up with the earning date for MedLife, which is October 30. Okay, so in the option chain, we're gonna look at October 30, which for sure will be more. Actually, we don't have 30, so we'll use 18, which for sure is 50 days, which is more than 11. Okay, and we're gonna right click to analyze and buy a vertical because we are planning on a vertical spread. Okay, and I'm just gonna use 44.7. We said that's gonna be the entry price, correct? And we also said that the target is gonna be 43. So I started with selling a put below the target, which is 42.5. Okay, and then now I'm gonna buy a put and try to obtain a 30 delta negative. Okay, so 30 delta negative. Okay, and that's gonna be done. Well, if I buy the 47.5, that is way, I mean, I do get the delta, but it's way too much. Okay, so back to the 45. My way to increase my delta would be perhaps to move from 42.5 to 40, and now I get 36, which is better than 40 something. So that would probably be the way to go. Do the 45, do the 45.40. That would be the way to go. Yes, confirmed. So let's go for it. I'm gonna place the order, guys. Okay. I'm gonna place the order. I am placing an order to buy a bear put spread made of buying one of the October 18 expiration 45 put, and then I am also selling together at the same time using the same expiration date, one of the 40 put. Okay, so buying the 45, selling the 40 put, this is called a pair put spread or a vertical spread or a debit spread. Same names for the same thing. And I'm gonna go market, activation rule, and we're gonna have a price rule because we want to enter this trade with MedLife options, but only if the stock reaches 44.7. If the stock doesn't reach 44.7, we don't want to enter the trade yet. Okay, so that's why we have what's known as an activation rule with the condition greater than or equal to 44.7. And I'm just gonna place the order and click yes. Okay, and when looking at manage, you can see that I have a trade with MedLife. I also have a waiting trade for Tesla from the other day. I will cancel this one. Okay, so that one is out. So trade MET. Okay, this is the trade that we have where we are buying the bear put spread, buy the 45, sell the 40. Okay, with a condition to buy that spread only if the value of the stock goes up to 44.7. Anyway, my friends, the trade is now concluded. Okay, the trade is now concluded. We are done with the session as well, and I will see you next time. Let me get the calendar just to make sure I give you the right date. Yes, Brian, good idea. Brian earlier, a few hours ago, was explaining how to set alerts with TradingView, which is amazing because those are alerts on the server side. So even if your computer is off, you get alerted. So I get your point, my friend. And yeah. So yeah. So next time I'll see you will be Saturday. Notice the time, it's 11 a.m. New York time, Eastern time. We'll do sharpening, okay? We'll begin introducing the different futures markets so we can start utilizing more futures markets when we do short-term trading, okay? And that will be the plan, okay? So anyway, see you on Saturday. Keep up the good work and stay disciplined as always, okay? And go find some trades on your own as well by replicating the process I have been utilizing. And if you guys were to have any question, of course, you know how to find us. Send us an email to reach@tradewithufos.com. A pleasure to be here with you guys. Loving it. Love the collaboration, the teamwork. Love the fact that you guys are helping each other with reporting your fields. Way to go, my friends. Okay, way to go. See you soon. See you on Saturday, my friends. Bye-bye, everyone.